is live here. I'm live on YouTube. So, but there's no questions. Start again. Yes, I think I'm going to start again. Let's cancel that. Hi everyone. Looks like the first session didn't start properly, so just bear with me a second. I've just got here now. I was talking to myself. But never mind. Worst things happen to see. So, good morning, Ebony. Hope you're well. Sorry about that. It looked like it was connected. Oh, perhaps it has reconnected because it's timing out from when I was before. Anyway, reason for today's post was actually let's just have a look at my ugly mug for a little while. Reason for today's post was all about the claims. 719,000 last week. Missed expectations. I've just been saying, probably to myself. But they've come in worse than expected. They've missed expectations. They've come in at 744,000. So last week they'd gone under, or they were expected to go under 700,000. They didn't. They did the week before. They were expected to be at 680,000 today. They're 64,000 worse than expected. Last week has also been upgraded from 719,000 to 728,000. So as I was saying to myself, because there's nobody here, the continuing claims have also missed. And the 4-week average is also back up to 623,000, 621,000. So, as I was saying earlier, the big NFP blockbuster number was very positive, of 916,000 on Friday, but these continually weekly unemployment numbers. Remember what these numbers are. These are new claims, people becoming unemployed in this week, the week ending the 2nd of April. So it's quite significant, and it's showing not necessarily the fragility, but the lack of robustness, shall we say, of the US economy. Remember yesterday as well, IMF upgraded the global economy on the back of a strong 6.5% growth for 2021 for the US. We still might see that, but here in March, in April, into the end of the first quarter, beginning of the second quarter is still a bit flaky, so it's still not as robust as some might have anticipated. So we've had a weaker dollar today, particularly against the yen. Dollar-yen is the biggest mover of the main the main crosses we have a look at, and that's data from the unemployment claims hasn't really helped things. So we're under the key 109.20, and we were all the way up here only 2 days ago, 110.50. And remember, we got within 3-4 pips of 111 before the end of the month, only a few trading days away. And here we are all the way down here at 109. And 109 itself is being tested. There we are. There's 109 here. So the yen coming back into demand. Remember, the yen was weaker into the end of March, which is fairly typical. But the dollar's down against many of the others as well. So as Ebony's asking here, we'll have a look at gold in a minute. Gold's remarkably held up. It's been over 1750 a day, Ebony. It goes for everybody. If you want to have a look at a particular asset, please stick it in the question box, and we'll have a look at it together later on. Let me just check my Facebook questions if there's any on there as we've come live now. Can I see myself? Not yet. So let's have a look at gold for Ebony. Say gold, I noticed it touched 1750 earlier today, Ebony. I don't know what time frame you're trading, but this is the 1 hour time frame for gold, and as you can see, with the highs have been getting higher over the last week or so, and the lows have also been getting higher. So we had this big rally from this 60. This is this key 1685 level down here. Sorry, where am I? There we are. Down here at 1685. It was a big support on the weekly time frame. It looked very bearish, certainly on the daily time frame here, as we were going down here from this rally we'd had to where we are now. Basically, this is the daily time frame. Can you see where we are there? We're here. Zoom that up. This is the daily time frame. So we've moved down quite significantly under that 1700 level, the big yellow line here, into 1685, which is a support level from here from early March. But if we go up to the weekly time frame, it was also a key level. If we go all the way back here, this is 1685 now on the weekly time frame now. This takes us all the way back to April 2020. So a 1 year low was punched here towards the end of March, beginning of April, and come back to the daily. There we are. These two daily candles here in beginning of March, end of March, and we've rallied here into the new quarter, into April. So significant move up 2 days. Wasn't sure what was happening, but here you can see that we need to, here on the daily time frame, we're at this key area. We need to break over this and close quite significantly over 1745 to hold us over this key little range here. So a close over 1745 on a daily time frame is relatively bullish, and as you can see, the 4 hour is also quite bullish here on this crossing strategy we talked about. We showed you how to use yesterday in our webinar. Here, the 4 hour candle for gold went long here on the 31st, and it's continued to go long, and it would have closed out just yesterday. I think we talked about that in the webinar. So a nice big run there for 4 hour traders, and then you could have gone long again this morning as that's bounced back off the 20-day moving average, closed under the 9-period average to close out this long here, and then gone long this morning as we went into the 200 period on the 4 hour, and then another positive candle later today. So 1747 we trade at the moment, and it's looking relatively bullish for April so far for gold. 1750, as I say, being tested. So an interesting one today for these first few days of April. However, that's coinciding with the weaker dollar and the weaker yields. Let's say yields were down to 164.70 before when I last looked, before I came on stream here. So watch that. Is it going to continue? We've had a full week of dollar weakness. Is it going to continue? Well, I say only time will tell. But trade what you see, not what you think, and trade the time frame that you trade, basically. So I say dollar yen is the big mover today, under 109, and here we are testing 109 itself, 109.20 today, but testing 109. Euro, a bit of a certainly sideways action today. 119 yesterday we got over, and we'd been sort of capped by the pivot point here today at 118.80 before this unemployment data broke, and supported by the bottom of the Bollinger Band there at 118.58. The top was 118.18. We're just breaching over that now, breaking over that now, out of this little range we've had all day, but not particularly exciting. But 119 is our top resistance with R1 today. R2 is up there at 119.34. So there we go. Arun, hi, hello. For some reason, I'm not getting any questions from Facebook, so sorry, guys. Arun's asking about euro dollar. Arun, here we are. This is euro dollar on the 1 hour time frame. Key big fat round number 119. Hope you can see that. This is the pivot point and the round number that is 119.00. We've been sideways all day today. We're sort of breaking over the pivot point. So next resistance is that R1 at 119. Support is the pivot point, and then below that is this cluster of moving averages. The short-term moving average really sort of stuck there. The 20-hour is here at 118.72. The 50-hour is coming up to meet it. So fairly strong resistance or support there at 118.72 area. And then there's the lower Bollinger Band at, where's that sitting? That's sitting around 118.58. And then S1 today is, where's S1? We haven't been down anywhere near that today, 118.45. So a dollar weaker sort of across the board. Femi, hello, my friend. For some reason, our Facebook page isn't working. Why isn't it working on Facebook? Nobody here on Facebook. I just promoted it on my Facebook page as well. But for some reason, it's not working. Anyway. The other key thing, obviously today, we've also got, that was the key economic data that's just come out. Hello, Femi. Euro yen. Let's have a look at euro yen. The other key thing that may move markets again, may move the dollar. We got Chair Powell at a IMF seminar, an online seminar, And also Kashkari and Bullard from the Fed as well. Both got speeches as well later today. So obviously watch out for anything they've got to say as far as monetary policy. It's about the seminar from the IMF is obviously about global economic development. So there may be unlikely to be some new comments because obviously we had the minutes from the Fed yesterday talking about lower for longer. Still, this idea that inflation is relatively benign, and even if we get a spike with it, they're comfortable with it. That's what they're hoping for. And some are saying Jay Powell's perhaps the most dovish of them all on the FOMC. I don't necessarily concur with that, but it doesn't really matter what I think. But certainly, there's no real change in policy from the Fed, and nothing really of any surprise expected today. But you can never tell. Sometimes they get asked things that come up. Right, we've got some more questions coming in. So let's just run through Euro, Yen. We've got CAD, gold, cable. We'll come on to those guys. So Femi's asking for Euro, Yen. Yeah, certainly. I'd say all the dollar crosses are relatively big. Aussie was strong. Was one of our strongest movers this morning. So where are we? Let's have a look at Euro, Yen. We got some. There we go. So Euro. What a tanker that is. Euro weaker, Yen stronger, and there we go. This is the 1 hour time frame for Euro Yen. Femi, I don't know what time frame you're trading, but certainly it was a big move yesterday. Also, pound against the yen was a big move yesterday. And this is the 1 hour time frame. See, we've been trending higher earlier in the week, and this was yesterday. Big move down yesterday, and this is today. Huge collapse today. But again, having a trend. This is another reason. Have a trend following strategy. And, when the moving averages start to move and start to slope, you got some angle on it. Whether using the Bollinger Bands or moving averages themselves, you can be on the right side of a big move. So here, using this strategy we talked about yesterday in the seminar, in the webinar, that was the last big move lower here, was yesterday late on, having moved down here on the 1 hour time frame. So that was short. Your stop loss would have been up there initially where the market's turned, and then you've just trained it, you've just followed it down today, and it's it did return back over the 9 period. So that would have actually been again, depending how you're trading this, but you've been trading this with one of the options where we stay in it until it closes back over the 9 period. You'd have been out there for a short loss, or you'd have just stayed in. If your stop loss has still been there, which it should have been really when you were down here, you would have still been in this and just trailing this down. If, on the other hand, you'd been in it and got out when there, you could have re-entered there this morning at 11 o'clock, and it's just really ran for you. The average true range, the ATR, is 14 pips per hour on this particular one. So lots of pips available for Euro Yen. That continues to be lower. Obviously, Femi, you'll be interested where it's going from here. The 4 hour also triggered short here, but only this morning at 8 o'clock. That's gone down quite significantly, obviously. And the daily time frame looks like it may be triggering short tonight. We don't know that yet, but daily still remains relatively well bid. We went down and then we went back up. So the daily, we can't break over 130.35, Femi, on the daily time frame. So pivot point is key today. See where we close. And that's looking to trigger short and indeed close the long, particularly. That would have been a long there and out there. So that hasn't worked out. That would have been a losing end of day trade. But S3 is key today. So that looking like that might be turning short on the daily time frame. But the lower time frames are certainly lower. Right, apparently I can see my Facebook comments now, so let's have a look for the questions. So let me just put that up. See if we've got any questions. Coming in. Okay, we'll check those. Right, let's go through this. Femi, so I've also, that's answered your question. Right, there's quite a few coming in now, so let me just go back. That was Femi. Gold, we just looked at gold, Shuban. I don't know if you're here, but let's run through it quickly. Gold remains sort of bid here intraday. Key thing, it's tested 1750. For me, the end of day, we need to close over this area here, this 1745 level, which is sort of where we are now, for this to be relatively strong. See the end of this is the end of day analysis, and that went long on the 1st of or close to short and went long, reversed to the long on the 1st of April, and it's moved up quite well. But the weaker dollar has got to persist, and the cooling of the yields has got to persist for gold, to continue to move up. So 1745 on an end of day basis, and then the key resistance is here at the top of the Bollinger Band, and the 50-day moving average sits at 1760. So end of day basis looking quite good today. 1760 is the next area we want to be looking at. Intraday, 4 hours been long since the end of the month, the 17th, the 31st of March here. That's been long over the 20 period, over the 50 period, and really moving up quite nicely out of for a profit there, and then long again this morning over the 200 period moving average this morning again, and another strong 4-hour candle. So R2, that 1750 is the target. So gold on the bid on the upside there. Shubha, I hope that's answered your question as well. Cable, Mohammed has been moving down today. It's picked up on that weak jobs data. This is the cable on the 1 hour time frame. If you look at the daily time frame, you can see it's rejected 139, moved down under 138, and has support of 137. So they're your three big lines in the sand, Mohammed, for cable traders. 139, 138, and 137, big round number. Towards the end of March, we went under 137 itself, and that's a key support area, and that's where S1 lives today. So again, rejecting 139, short here, short down again yesterday, and it's bounced a wee bit today. So a bit mixed, but certainly now tracking between 137 and 138, whereas we had been tracking between 138 and 139. So the bias has sort of rolled over. 4 hour, again, another one went short here. When was this? This was the 6th or 7th. So looks like that's moved down. That's 4 hour, and the 1 hour was sort of tracking lower, closed out the short, looked to go short again, turn around. So a bit choppy today. So it needs to today on the 1 hour setup, it needs to break this 137.65 area where we are now, which is right through the pivot point. And then you can see 138, but you see the resistance here on the shorter time frames. We've got R1 just above 138, and we've got the 200-hour moving average as well there at 138.07. So a big fat wall to get through there. So whether we've got the legs to make another 40 pips today or not, I don't know. But that's it's sort of bounced up off the lows of the day after the US data, but before obviously the US market opens. Mohammed. What causes weakness in pound today? Seems all GP pairs going down. Yeah, it's along with sterling with the dollar as well. It's a weaker gilt market that's worried the pound. To be honest, data's been okay. Nothing to particularly worry about. There's some political shenanigans going on. Obviously, the pound sterling. This is the pound. Sort of just weakening here against the dollar. I've got some pound certainly weaker against a stronger yen. This is more to do with a stronger yen than a weaker pound, to be honest. So it's a combination of things, Simi. Don't overthink things, guys. You know, if you're trading technically, wait till your system triggers. You know, that was we'd been sideways here, holding up quite well at highs. Earlier in the week, and then here on the 6th, day before yesterday, Tuesday, we triggered lower, and it's continued to move down. We moved up a bit yesterday, and then big down candle yesterday afternoon, continued to move down into the close, sideways in the Asian session, then down again this morning under S. So again, you know, the trend is set, where the highs are getting lower, the lows are getting lower, so don't fight it. Don't overthink things either, Similarly, my friend. I hope that's answered your question. Douglas, we just talked about sterling cable. You know, as we say, under S1. This isn't cable. This is the guppy, but cable. As you're on the screen there, again, as I say, we've moved down. Need to get over this pivot point. There's the big fat resistance, and that's our low today here, 137.15. So to the upside currently. CAD had moved up quite well. This is CAD on the hour basis. We talked about this morning. Went short here this morning, retraced, and would have sort of stopped you out there because maybe it depends where your stop loss was. If you'd had your stop loss about up here, which is really where it should have been, here you would have still been in that. Yeah, you've still been in that short, although it's gone back up over there, and then another big down candle here. So Dollar-CAD has ended its big run up we've had this week. We couldn't struggling to hold 126. This is 126 here. You can see that 126 here. Late yesterday afternoon, and most of the day it's been playing around with it. But a big down candle ahead of the jobs from the US. Support is 25.50 here. This little liner here, and then we've got the 200-hour moving average here at 25.75. Then there's 25.68, which is in there for some reason from a higher time frame, which is where our S1 is. So three key support levels to the downside here, but it's tracking lower, triggering lower again. In fact, you'd have still been short trading this, even though it went against you here, because it hasn't stopped you out. Your stop loss might have stopped you out if you pulled your stop loss down to here, which you probably had done when you got to the pivot point. So it would have stopped you out, but certainly you would have gone short again. Certainly, if not then, certainly here on this particular candle, because it's a big down one then. Dollar-CAD on the 1 hour basis. Abdullah, if you want more, again, guys, put the time frames in if you want something a bit more specific about the time frame. Aussie dollar, yes, it had been a big mover this morning when we did our analysis for the internally this morning. We saw that Aussie dollar was up a third of 1% this morning. That's what this little tick here is as we've gone long here at 8 o'clock. Big resistance, went through it, went high, then we came back down. But here we are, you see a new strong candle because of the weak US unemployment numbers here at 76.45. So 76.50 is a key resistance, and then R1 at 76.95. So Aussie being strong today from that test. Remember, went all the way down yesterday. We tested .76 itself and then recovered this morning over through this resistance level and then up. If we got the higher time frames, 4 hour, very, very choppy. Lots of messing about here on the 4 hour time frame, but certainly not clear that's sort of going through there. And there again, it's the choppiness of moving averages not working out there. The daily time frame continues to sort of move down, and we're still under the 20-day moving average, which sits at 76.65. So from a strong run up, the Aussie is sort of still tracking lower, but has key support, as we just said yesterday, at 76. So, but still biased to the downside. That one, although a better day today from a big sell-off yesterday for the Aussie. So again, whatever time frame you trade that one, Adesiana, I don't know. Bunny, hopefully we're still here for the cable. We showed those key areas. Euro, yen, Aussie wallet is yes. I showed you that big sell-off, my friend. Yes, we looked at that earlier as well. Almin, hopefully we're here for the cable one. We've done cable. If not, ask again. My friend will have a look at it again, but lots of people ask about cable. We've already done it. Gerard, pound against the Swissy. I'll have to go to a different setup. Let me just change profile for that one. I haven't got that here on this setup. British pound, there we are. Swissy's been relatively weak as well. Where are we? Pound Swiss you asked for. So, daily time frame yesterday or earlier in the week. Let's just zoom this up. Start the daily time frame if you haven't specified a time frame, guys. Strong run up. Key resistance at 129.50. This is 129.47, the actual line here, but key resistance at 129.50. We couldn't get above that really. I certainly couldn't hold 130. So this is sort of consolidating at high still. Although yesterday was a key break over this low we'd had here in the middle of March. So channel bound, but we're out to the bottom of the channel yesterday and again today. Certainly closed the long here on Tuesday as we went under the 20-day moving average. And that was probably yesterday, was probably enough. If it hadn't triggered here from this rejection up here. This see that classic 4-day high there at 130.25. Big sell-off here on Tuesday, followed through here again today. So sterling's turned around the last few days, and that would have been a short position there under the 20-day moving average. This is the end of day, remember, Jared? I don't know what time frame we trade. Shorter again today, out at the bottom of the channel on the daily time frame. So weak, excuse me. So the 4 hour and the 1 hour look particularly weak as well. The 4 hour, first triggered here on the 5th earlier in the week. Retrace, but again, your stop loss would have been up there, and that's just continued to move down under the 50 period moving average on the 4 hour. Consolidate, then move down, and under the key under the 200 period moving average here, the golden line on the 4 hour. That's the yellow line. That's our daily channel support, and we're under that yesterday and all of today so far. So continuing to decline. The 20 period moved under the 50 period. That's also a negative move there on the 4 hour, and the 1 hour will have gone short even earlier. 1 hour's gone short up here back in the 6th, and it's just again another one that's trended low, I should say, back into the daily channel, out the bottom of the daily channel. The 50 period crossing the 200 period up here. So death cross up here on the 1 hour time frame earlier this week. So again, another one that your trend is very much your friend. Testing the 20 period here, but couldn't get out back to the channel earlier and back down again. So continuing to decline. MACD signal line starting to move up on the 1 hour, but it may just sort of loop and move back down. Stocks is run out of up, so that's the key resistance here. You can see here the parabolic SARS being negative all this way, half of yesterday, all of today. 50 hour moving average, 200 hour moving average, all pointing down. Pound Swissy weaker. Gerard, gold is going to short. I sell it well. It looked okay last time I looked at it. All right, Muzi, hello, my friend. I hope you got my message on when I messaged you. We'll have a look later, okay, when we finished here, if you don't mind. Wings, we just looked at gold. Muzzy's asking about, let's go back to gold. A lot of you asking about gold again, so I don't know whether you've missed what I said before. But gold, it's not on here. That's sterling here. Let's go back to, actually, let's look at the commodities one on this setup. 4 hour and daily. So this is US oil. You don't want that. We want gold. So gold, let's zoom this up a bit. So gold had been trending lower. We'd got into this 1685 zone, it's 1682 on this particular chart, which was a daily low. We tested that again in the middle of March, and again right at the end of March. And it's also, we got to the weekly time frame, Muzzy, because you need to have a look at that if you're trading on the daily time. What's doing that? It's a key support level, which takes us all the way back here, this 1685 or 1682 as it is on this particular chart. Back to January 2020, so over a year low. June 2020, and back into April as well here. So key low area 1685. We bounced off that. So let's go back to the daily time frame. We bounced off that at the end of March, and we've had a strong April so far. So strong start to April daily time frame over the 20-day moving average for the first time. But as you can see here, as I said earlier, we need to close today, and it's looking quite strong at the moment. We need to close over this resistance here from when we last moved up, the last retrace before we moved back down again at 1745. So a close over 1745 technically is a positive close, but then we've got key resistance, the top of the Bollinger Band, and the 50-day moving average sits at 1760. So 1745 close today is relatively positive. Obviously, there's the psychological 1750, then 1760, and then the 200-day moving average sits there at 1795 if this rally in gold is going to continue. So it needs to break out. If this break fails or doesn't actually follow through and bounces off the 50-day moving average, we could easily quickly go back to 1725 and then test 1700 itself again, possibly. But it's looking okay at the moment. On a 4-hour basis, this would have been long here from, this is the 4-hour chart on gold. So that went back over its 20 period moving average here at the end of March, we saw with that big daily candle, and it's been long ever since, through 1725, resistance at the 200 period moving average for the 4 hours, bounced off it down, but held here at 1730, and then it's broken high. So that's positive. 4 hour remains positive. It's at R2 today, so it's had a good run. We're over 1750. So that's looking positive as well. Next resistance is the daily R3 at 1758 for 4-hour traders. Shubha's saying all gold lovers here. Yeah, there's lots of people get very attached to trading gold for some reason. I don't know. It's fascinated mankind for centuries, hasn't it? The old yellow stuff. But never, ever, ever get too attached to your trades, guys. Accept your losers. It's one of the key things any successful trader will tell you. You've got to accept losing. Most people find it very, very difficult and can't deal with it emotionally. That is the biggest stumbling block many, many traders have, my friends. So have a look at that. Reading for the 10 people who was interested. What does that mean? Reading for the 10 people who was interested. I don't know what that means, my friend. Wukong, I can't talk Vietnamese, I'm afraid. Wukong, if you want to be, I'm happy to, if you're a Vietnamese analyst, technical analyst, I'd be happy to speak to you and speak to all our friends in Vietnam. Certainly. Euro. New food we had a look at before, but it was sort of sideways. I haven't got euro here on this particular chart. Let's look at euro for you. Let's have a look at this one. Again, guys, I'll default to the daily time frame if you don't put it in particular trading time frames you're interested in. Show up Nasdaq. Yeah, we'll come to the Nasdaq in a minute because the market's open in about 20 minutes or so. Where was I? What am I looking for? Euro. Euro bit sort of sideways bound here, Numan. We got key resistance here at the big psychological 1900 we said earlier. We had been, before the data came out, we had been sort of capped by the pivot point. The weak US data has broken over today's pivot point, and next resistance is that 1900 R1 level to the upside. This is a 1 hour time frame. We tested but didn't hold it for very long at all. 119 yesterday. This is the 1 hour time. We've got it 30 minutes. You can see it was less than an hour. We were over 119 yesterday. Then we came crashing down, moving down quite significantly into the floor, which we've tested again this morning, and then moved up again. So it's two big up candles in the last couple of hours for the euro from this floor at 118.60 through the pivot point, and 119 is the next big line in the sand for euro traders. So Wuhan, as I say, send me an email at webinars@hotforex.com if you're interested. I'd be keen to speak to you, my friend, or anybody else out there for that matter. Mohammed, good afternoon. Somebody's asked about Nasdaq. Shust, Nasdaq, USA 100. Lagging the other two, we had a 4,100 breach on the USA 500 earlier, and the Dow also pushed new all-time highs, but the Nasdaq has been lagging, although still moving up. This is the 1 hour time frame. Let's go back to the daily time frame. So it's still obviously positive. All-time highs is back up here at 13,920 from the mid February the 12th, February the 16th sort of zone here. We still haven't got back to there for the Nasdaq because we've had this churn out of the tech stock heavy Nasdaq into the more value stock based Dow and USA 500, S&P 500. But it's still big. It's still positive. It's over its 50-day moving average. It's over its 20-day moving average. It's still grinding high. It's having a good day today, and technology. It's had this big driver, and it's driven everyone. But it's still, still you can still pick some stocks in that technology sector. The biggest of them all, Apple announced this morning they were pushing back some production because of the chip shortage for their MacBooks for the first half of 2021 into second half. Excuse me. Continuing to still positive, moving up. Intraday, I guess, I don't know if you're more interested in intraday. It's sort of leveling off, but it's this is the 4 hour on the Nasdaq, and that's a steady trend for me. It's up, it consolidates, it's up, it consolidates, it's up, and it's still moving higher today. 4 hour, and the 1 hour will be a bit more pokey as well. There we go. the consolidation a bit more exaggerated. But certainly we had a strong, relatively positive day today from above the pivot point all the way to R2. R3 today for the Nasdaq sits up there at what is that, 13,800, top of the Bollinger Band. Been consolidating most of the day sideways. The European session and US cash markets about to start in about 20 minutes. So that remains, again, another one that remains bid. As you see, the cross down here hasn't moved, it's moved up, and that's been positive since the break yesterday afternoon here on the 1 hour time frame. Chad, hello, my friends. How are you? Any info on cotton? What price? Cotton, I can't remember the last time I looked at cotton, but let's have a look at cotton, shall we? Let's find cotton chart. Let's have a look. So let's start the daily template. What template? Pick a template. Somebody shout a number out of 1 to 10. Let's start with the one we've just been looking at. So cotton market down here for March, wasn't it? We've got a strong run up, but again, you can trade as with any asset. You trade it what your indicators are telling you. Actually, I can stay there. So it's been short for most of March, and it remains short. So again, using this strategy here, cotton on an end of day basis would have gone short here on the 4th of March, and it's continued to track lower. That was probably a bit of might have stopped you out there, but again, your stop loss, well, ideally on this particular, your stop loss is there because that's where that trend has ended. So it's 1, 2, 3, 4, 5, 6 candles behind where you got, and it's a bit high. You could have perhaps, been a bit more aggressive and had it, top of that wick there perhaps. But as it's moved down, certainly you're still, even here we are. You may have, you would hopefully, I would guess your stop loss should be now here at the top of this big candle here, but it's moved down. But again, you could have closed out today because it's back over the 9-period moving average there if you're doing it, depending on how you're trading this. But certainly that remains short. But there's clearly a floor being formed through here. 77.50, probably a wee bit higher intraday. So 77.50, 77.60 is that floor for April at the moment. And it's looking to move higher. However, to move up on this strategy, we closed out the short, but to go long again, these moving averages need to cross, and we need to break over the 20-day moving average. So it's still weak. We need to break 82.30, where R3 is today on the end of day basis. I don't know what time frame you would be trading this, Chad, but certainly that's still tracking lower. If we go to the weekly time frame for this, it's had a nice strong run. And last week that would have that would have ended your long positive run last week here. Can you see that? Not last week, the week before last here at 80.30 from the break higher here at whatever this was. This is all the way down here at 61.45. So you've had a very, very strong run from the middle of May last year all the way to the end of March this year, and we got as high as 94. Close to 94 in the high, but so we've had a very positive run, and now it's certainly ended that run and looking to perhaps go short, but it's bounced again this week. So possibly is the answer to your question. The 200-week moving average sits all the way down there at 71.88. On an end of day basis, the 200-day moving average sits all the way down there at 75.11. So it's down. It needs to break that support there at 77.60, and then the 200 out is down there at 75.1, but it's still relatively weak. Again, it's on your time frames, Alessa, my friend. Emmanuel, we just did Euro. I enjoy your program. Thank you very much, my friend. Moody, silver. I haven't looked at silver for a long time either, but is silver, I don't know, guys. Is silver following gold higher? Silver. This is the daily chart on the silver market. And again, another one that's been short from here at the end of February. down, consolidate, then down, and it's bouncing back up. So today, let's zoom this up a bit. We can't do anything about today because it's not finished, but the daily candle today is positive. It's back over the 20-day moving average, so it's looking like we may be going, or this strategy may be triggering long on an end-of-day basis from this bounce into the 200-day moving average and a close underneath it. That looked pretty bearish as we were going down there. We've turned around and closed out. So again, another low, short, out your short. So two successful shorts on this silver move. And now this end of day is looking to go long today if it closes here. Certainly the 4 hour and the 1 hour will be quite bullish as well if we go down the time frame. So 4 hour would have gone long here. Where's that? That's the 4th. What's that? No, that's the 1st of April. So that's been long from the 1st of April silver. It's got key resistance on the for you 4 hour traders there at 25.55. That's the 200 period moving average on the 4 hour time frame, just above R2 today. So it's had a good couple of days, good day today. If it breaks that, next level is R3 today at 25.70. And the 1 hour traders, let me update that. That's went short, then it went long, closed down, short, closed out, and then it's gone long here again this morning on that big candle there at 8 o'clock, and you've been long ever since, and that's tracking higher. And like we said, it's through R1 and R2. Sorry, that's R2, isn't it? R1. Is that R3 level there? We just said at 25.75. So there's silver for you. Horan, good morning to you. Hope your day's well. Hope you started well. Hope we can help you. Poet, we just looked at gold. If you want to have a look at it again, please stick it in there because I'll let you asking about gold. 1735 downtrend gold. Well, gold looked pretty bullish to me earlier, my friend. 1753. I mean, anything's possible. Space. But that's bullish. We're over R2 and we're over 1750 at the moment, and it's over. This is the 1 hour time. This is the 4 hour time frame for gold, and that's its 200 period moving average, which has broken it now. But obviously, that again can't make a decision on that because that candle's not completed. In fact, that's just started at 1 o'clock. That started, so it's nearly completed, but it's a bullish candle following a break of the 200 period there. 1 hour is up again, and that's been trending higher all day. And the daily candle, as I say, broke the 20-day moving average here on the 1st of April. It's continued to move up, but has that big resistance at 1760, where the 50 period moving average, the blue line, and the top of the Bollinger Band coincide, and then above that is the big round 1800 and 1795, where the 200-day moving average is. Muzzy, we did that. We did those time frames for you, certainly. Haran, you've obviously just got here, but it's been Euro really. Haran has been trekking sideways all day. It was capped by the pivot point. We had the week unemployment data out of the United States in the last hour, and we've moved higher. So resistance, big resistance at 1900, R1, and it's a big psychological handle. Yesterday, when we went over it, if we go down to the lower time frames, you saw we were only over it less than an hour, 1900. So that is a key resistance level here. This is the daily time frame, and you can see it's been bullish for most of April. As we said, the weaker dollar for this first week of April, and we're testing the 200-day moving average. So it's a key level where we are today, that pivot point. So a break over the pivot point today. This candle finishing like that's a positive move for euro, bouncing against the dollar. But will it continue? That's the question. But certainly it's been moving down lower under that 1725 level, but had a strong start to April. Oh, Jubal. I hope you're not talking about me. I get very upset with those sort of comments. Oh, God. Usman, go away. Pound yen on 1 hour. There we go, Reen. That's the sort of thing we want to know, isn't it? Let's an asset and a time frame. So pound yen. Well, you, Reen, you tell me what's going on here. That's short, isn't it? It's been down from this consolidation we'd had earlier in the week. Tuesday started to unwind, Wednesday continued down, and Thursday's continued down. So as you can see here, clearly from this consolidation up here that we went through for Friday, Monday, Tuesday, and then we started to unwind. So the first trigger was really that one there. Zoom this up a bit. Was that one there? Although it was a weak one because it hadn't broken out. But once we started to move, that's a big negative one. That's another big negative one under the 200-hour moving average here. Late on Tuesday, about 8 o'clock. Then we went sideways. Then we went down again. Then we went sideways. Then we've gone down again this afternoon. And we're under S1 now at 150.20, 150.30, and continuing to trek lower or trend lower. So 150 comes back into play. We've tested it in the last hour or so. Here, tested right into 150 itself, and then S2 at 149.80 is the next level to support. But again, another one that's broken lower this morning and continuing to move down. 150 is a big psychological support area, so see what happens on that one. But that one's been short on the 1 hour time frame. The 4 hour, so see what the higher time frames are doing. They 4 hour. The key one was for the 4 hour traders was the fact that it broke its 200 period moving average this morning at 12 o'clock. Big break as well, significant candle. It's a big candle, and it's a significant break below that key 200 moving average level, and it's under S1. So that they're sitting pretty and still short. So the higher time frame short. So that see if it turns around in your time frame. But again, it's still short, and the 30-minute time frame, the one below your time frame, is also still short, and even the 15-minute tried to turn around, but still the 15-minute is under its 20 period moving average as well, and has been since 10 o'clock this morning. So the lower time frame is still short, the time frame you're trading is short, and the higher time frame is still short. So there we go. What can I say? It's still relatively weak. It's a stronger yen today and a weaker sterling. So it's a combination of, that's what you want, a weaker currency, stronger currency, and it continues to trend. Muzzy, Dow Jones on the 4 hour Dow, where's the Dow? USA 30, 4 hour, you said, 4 hour. Let's go back to that. Daily is still bid, it's consolidating, but it's bid. It's over that key 33,000 level, which we broke at the end of March. It's holding that as a big psychological level, and that's where the 200-day moving average is. So you would expect the 4 hour to remain positive. Well, it is. It's very flat. That's not trending at all. It's run out of steam, the 4 hour, certainly. That's looking to break up. So the Dow there, for me as a 4 hour trader, you'd want that to break these all-time highs at 33,535, where R1 is, or you'd want it to break below the S1 level at 33,365 to move lower. But that's really tracking sideways, and there's no trend there on the 4 hour chart for me, Muzzy, my friend. Pound Aussie on the 1 hour. Again, we got a weaker sterling today. Aussie's being bid, so I'm guessing that's just assuming as we go. If I actually look at the chart, that's it's the wrong pair I've got. Perhaps it is on here. Excuse me, I've got the pound here. Pound Oz tracking higher, then moved lower. Oh, it's a messy one, isn't it? Let me take those fibs off. Some of that. That's a messy one, but it's biased higher for me, really. Well, actually, it's probably rolled over. It's still, the lows are still getting higher, and the highs are still getting higher. But there's some sign of a rollover here in the last couple of days as the pound has weakened in the last 3 days. So on Tuesday, there's a big sell-off under the 200-day moving average, supported by the 20-day moving average, but we've breached under that currently today, and a big wick. Clearly no more buyers to recover from this. Look at this candle pattern from the last few days. So we ground up into the end of March. We moved up again first couple of days of April, and then we sold off very significantly. Big engulfing candle here on Tuesday, taking out 1, 2, 3, 4 and a bit candles. That's very significant down move So the next level, if this uptrend is going to be supported, this is just going to be a retrace of these levels up, is the 50-day moving average there at 178.79.65. So reading 178.65 is supporting the daily. You asked about the 1 hour, so the 4 hour is short. That was short there, moved down sideways, then moved down into the 200 period. It's got support there at 180, and the 1 hour is also short, but bouncing around 180. So to move this back up, it needs to break back over the 20-hour moving average, which sits there at 180.30. But to move lower again, it needs to break significantly. It looked like it was going to do it, but it hasn't yet. This 180 level. MACD remains negative because we're still under the zero line. The signal line's moved up and then dipped down. You can't see it because my head's in the way there. How do I get it? See if I can make it bigger. Is it gonna? No, let's get rid of me. No, let's make that bigger. There we are. There you go. See the MACD. Hopefully you can still hear me, but there we go. So MACD still negative. So it needs to break under 180 read on that 1 hour time frame, and to go high, it would need to break 180.30. But as you can see, bias lower from those higher time frames as well. Chad, no problem, my friend. No problem. Listen, please help make analysis on the US 50, the US 50.S. I haven't got that, my friend. If that's, I don't know who's offering you that. It's certainly not on our charts as far as I know, the USA 50. It's a synthetic index, so be careful trading synthetic indexes, ladies and gentlemen. That's all I'm going to say on that, because they're not real indexes. They're made up by the broker that's offering it to you. There we go. Right, let me have a look at some more questions in Facebook if I can. Why can't I see the questions? Let's try and refresh. Some of them are actually coming through, aren't they? Yeah, actually, there are Facebook questions on here, so that's okay. Right, have I bored you all silly? Looks like that's the final question. Reen saying thank you very much. Yes, that's good timing because my voice is about to give out. We've been here an hour, so let's wrap it up. Let's just go back to what's still to come today. We've had the main news of the day. Let me just recap. The new unemployment claims out of the United States missed expectations yet again. They came in at 744,000, missed the target, which was 680,000. 700,000's key because that was the low of the pandemic, 712,000 back in November, and we haven't been able to sustain that break of the 700,000 level. So we missed again this week. The continuing claims have also risen back to 3.73 million from 3.65 million expected, and last week was also upgraded again, and also the 4-week moving average has also ticked up another 2,000 to 723,000. Remember, these numbers are still very, very elevated. The normal economic cycle, weekly unemployment claims in the United States is around about 220,000, 250,000. 745,000 is still a very, very high number. So the fragility or the robustness of the US recovery is still being questioned. And so this huge stimulus package, this $1.9 trillion is being chucked at the US economy, is well needed. Although obviously we had this very, very positive and big blockbusting non-farm payroll number on Friday, the weekly unemployment numbers is still sort of tended to send a different story. So we shall see. Right, final comment. Joseph's asking about gold on its third. Gold is buying on its third wave movement. Quite possibly. It's a beginning of the other key thing about gold is the seasonality. We're at the end. We've ended the first quarter. It was weak in the first quarter. It finished weak, I should say, and it's had a strong start to the second quarter, and it is bouncing up. But as I said earlier, it needs to break. For me, on an end of day basis, the gold price needs to convincingly break over 1745. Looks like that's going to happen today. Can't tell because it isn't yet over. To break above this resistance we had in the middle of March for 4 or 5 days. See that big fat line there? We couldn't break over there. That's 17.45 on an end of day basis. We then retraced to test this key weekly support at 16.85. And, we've had as Joseph is saying now, we had a strong move here up in this first week of April as the dollar's weakened, as the US yields have come down. But is this going to continue? That's the question I'd like to see moving forward. So that's all for now, guys. Thanks for your time. We'll see you again next time we do this, which will be probably Monday or Tuesday next week. So trade carefully. Watch that speech from Jay Powell later on. He's part of this seminar by the IMF. Not expecting much comment on monetary policy, but it is about global growth. Obviously, it's been organised by the IMF. So we'll see how all that ends up. And Bullard and Kashkari also got chats tomorrow. Later on tonight, I should say. And then tomorrow, the main data tomorrow is PPI's Producer Price Index from China. We've got the big jobs data out of Canada tomorrow afternoon as well. So it's Canada's NFP, if you like, next Friday, tomorrow afternoon. So watch that as well. The Canadian dollar, remember, has been weakening as the oil market's weakened, and US oil remains anchored under $60. Well, it did last time I looked. Let's have a look at gold. We had that big miss for drawdown in the oil market as well yesterday. So again, that's the oil market on a daily basis. See, this trend line continues to hold as it's under $60. So we need to break back over $60 for the gold market. So that's all for now. Thanks for watching, and we'll see you all again next time. All the best, everyone. Take care and stay safe, and may the pips be with you.